Hello and welcome to another update video about gold. Yeah, on the gold chart, it's a really good chart. It looks solid at the moment. We are dealing with a nice 1-2 setup, and obviously the third wave could be in the making. I explained in previous videos that this is likely an ending diagonal in a wave 5. Could reach 2,500 plus in this fifth wave. That would then form a really long-term top. But we're dealing with an ABC structure from the 2022 lows all the way into the May 23 highs. Then another corrective pullback. So I'm calling that a 1-2 setup. Basically the 1-2 setup of the fifth wave, which is an ending diagonal. We are likely in the midst of the third wave. Have completed the A wave. We're now in the B wave, and the C wave could still happen. If we go to the 1 hour chart, the idea was that this is an A, B, C structure. Since the last update, the price has continued to trend down nicely in line with forecasts. The idea was that, an A wave completed in this overall correction. The B wave rally was a 3-wave move, so it suggested further downside. The resistance area was respected. I then shared with you another resistance area, basically a short trade area, if anybody wanted to use that. And the market respected it again, and we're now likely trending down in this third wave. Okay, so I would really like to see gold bottom soon, but it still needs to complete this third wave. Bear in mind, this is an A-B setup, and the B wave or B waves in general can be very frustrating. They can be very frustrating, and before we can continue our pathway higher in the third wave, well, we have to complete this very, very frustrating correction, this B wave correction. Similar, for example, to what we often see in the crypto market, the rallies in the gold market, they can be very, very aggressive and very exciting, but they finish soon, right? They finish quickly, and because it's typically quite aggressive. But then the pullbacks, oh dear, they can take a long time, and they are very, very frustrating. And yeah, I mean, at the moment, what we typically want to see in such a C wave, we want to see the price get below the low of the A wave. So minimally, my target would be 1988 and below, possibly rather targeting the area around 1894 to 1949. Below 1894, however, things are starting to look a little bit difficult for this setup, because then this pullback is going to go down too deep to be really reliable. If we look at the overall structure here, we can take the length of the A wave, we go to the top of the B wave, gives us a target for the C wave, and now you can see why I'm focusing on this area down there, because 1937 is the 100% extension level. That's a key level to watch really in this decline, because the A wave often has the same length as the C wave. That's one way of measuring it, but also these Fibonacci retracement levels are relevant as well. What we can also do, we can take the length of the wave 1 there of C, we go to the high of the wave 2, and it also gives us some more levels to watch. Typically, for example, the third wave, which is the current wave, would reach the area minimally of the 1.236 extension. That's 1976. So that's where I'd like to have the third wave minimally, maybe even a little lower. Then we should get a wave 4 corrective rally, and then the wave 5, could send us down into that region indeed, between 1894 and 1949. So I get good confluence down there in this region. So let's see. The current assumption is that this third wave of the C wave is now unfolding. The aggressive sell-off at the moment really, it fits a third wave. So I think we are on the right track here. Let's say we're riding the correct wave. And a break above the wave 2 high would mean I will have to reinterpret the chart, reevaluate the chart. It would be a break above $2,069, 2068 rather. That would be an invalidation point for the current move to the downside. What would be my alternative? The alternative would simply be that this B wave is likely still unfolding in a more complex, probably flat structure, A wave, and then A, B, C in a B wave, and then we come down in the main C wave of the larger B wave. But This is only the alternative, and only if the price breaks above that 2068 level, I would take that really seriously. At the moment, it is a viable and reasonable alternative, but it's not my primary scenario because the trend is obviously clearly down and is following the pathway that I laid out in previous videos nicely. Yeah, that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.